Hey, what's going on, guys? My name is Richard Moglen and welcome to another stock market video. Today, what I wanted to do is take you step by step through my ZM trade. So I'm going to be talking through my stock selection process, the actual entry point that I used to take up a position in this stock on March 18th. Then I'm going to be talking about the risk management that I put into place to limit my risk in this very volatile market environment. And then finally, I'll be talking about my overall trade management of my shares. So I think this is probably going to be one of the most useful videos that I've made. So please go ahead and leave a like down below if you find my analysis helpful. And if you're new to the channel, go ahead and subscribe as well. I post new videos each and every week about the stock market, talking about stock selection and also stock investment strategies. Just yesterday, I posted a video about the long-term leaders that I plan on taking up positions in after this correction continues. And I post new videos, as I said, each and every week. So I'd really appreciate it if you hit that red subscribe button. It's completely free. But getting into the video, today I'm going to be talking through, as I said, my entire ZM trade and talk about why I actually made this trade and broke my rules in this harsh trading environment. So starting with the fundamentals, as I do for all stocks that I consider, ZM is basically an A+ stock. And the fundamentals that I really care about are the earnings and sales growth numbers, the after-tax margins, return on equity, the estimates for the annual EPS numbers, and then a couple things on this chart that I'm about to highlight. So in terms of earnings and sales growth, ZM checks all the boxes. The past 4 quarters have seen some incredible earnings per share growth. Starting in the quarter ending April 30th, it had plus 400% and plus 100% in terms of sales. And that's been basically repeated in terms of triple-digit growth the past 3 quarters. So really incredible numbers here. And that's really what caught my eye and made me pay attention to this stock. And how it appeared on my scans, well, basically each and every week, I run a screen based on a bunch of data from MarketSmith. And ZM has consistently been in the top 5 of those screen results. And this screen basically looks for earnings growth, sales growth, great return on equity, great after-tax margins, great relative strength, great group relative strength, all those different criteria that I like to look for using that CAN-SLIM methodology. It's been appearing in the top 5, and that really means it's basically one of the best stocks out there at the moment. GSX has also been performing very well, but its chart is a little bit weaker than ZM's. So that is how basically it appeared on my screens. And I want to take a quick moment and analyze this MarketSmith chart because there's some key things that I was focused on that really made me want to take up a position in this stock. So the biggest thing really for me was this RS line. And if you're not familiar with what RS is, it basically stands for relative strength. And how it's calculated each and every day is the stock's closing price over the price of the S&P 500. And basically what this shows is how a stock is performing relative to the SPY. So the actual value on any given day doesn't mean anything, but what does matter is that trend. And for Zoom, this RS line has been increasing steadily since really it bottomed in early 2020. And what was really significant for me is when the overall market really dropped hard, ZM was going sideways. That shows you something about how it's performing. And you can see that that's reflected in the RS line because even as the overall market was dropping a lot and ZM wasn't really going anywhere, this RS line was hitting all-time highs. And that's so key to focus in on during these harsh trading environments. If you can find different stocks that are hitting new highs in terms of relative strength, those are the ones that are going to perform the best once this overall correction is over. And you can see that even recently after I bought the stock, the RS line has just skyrocketed. And this is really what I like to look at because it's showing you that there's something special going on at this company. And really the last thing that I want to talk about in terms of this MarketSmith chart is I want to point out how even during this market correction, ZM has been able to stay above its previous all-time high of 107.34. So it dipped below a little bit during this consolidation period, but for the most part, it was staying strong right at that all-time high. And that's key because you want to find stocks that are hitting price new highs and relative strength new highs during a correction. And Zoom was doing both of those. So that's pretty much what drew my eye and basically made me focus in on this stock for my watch list. And now let's go ahead and talk about my actual entry point and what made me buy the stock on March 18th. So zooming in to the recent times, you can see that on this day, I had both a green dot indicator and blue dot indicator. And if you're not familiar with my dot indicators, the blue dot basically represents a situation where the stock dipped below the 15-2 Bollinger Band that day or yesterday, and then closed higher than the previous day. So you can see there was a blue dot indicator right here because it dipped below the Bollinger Band and then closed higher than the previous day. And once again, that indicator was repeated on the next day. And then the green dot indicator represents a 10-4-4 stochastic cross. And what this means is there is a significant momentum shift upwards. And having those two dot indicators appear on the same bar, that's a powerful combination. And what I liked even more is that that combination happened right above the green line. I love it when I see a green dot or blue dot happening right above that previous all-time high. For example, let's take a look at LK. So right here for LK, you can see it sets that green line, which is basically a previous all-time high that isn't broken then for 3 months. And then here, it finally breaks through that green line and is ready to make a big move upwards. And then it breaks through that, then rests for a couple days, and then has that key green dot indicator right over that consolidation and previous green line. And after this point, it increased, I believe, 37% until my MACD slowdown indicator, which is great for a swing trade. And that's really why I love this combination, because right here, people bought it in here, see it broke through the previous all-time high, decide that they better sell the stock and lock in some profits. But the long-term holders, the institutions and long-term investors, they are keeping their shares, and that dries up that supply. And so just a little bit of increased demand will rapidly move that stock up. And that's just what happened right here. And I think that's what's happening with Zoom right now. And you can see it gapped up today. It's going a little bit downwards right now, but the trend will likely continue. So that's pretty much it for my actual entry point. And one thing I do want to add is when I actually bought the stock was moving up in price and the volume buzz was plus 71%. So volume buzz is basically the rate of volume coming in. And if a stock is increasing on above average volume, so above 0% volume buzz, that means that institutions are likely taking up positions and there's a lot of shares being bought at that time. So that's really what keyed me in on this stock. And you can see that there were multiple periods of large volume increases before I actually made my purchase. And these, once again, are kind of footprints of the big financial institutions, because when they buy shares, they're not buying 100 shares or even 500 shares. They're buying thousands of shares. And that shows in the volume indicator. And this is also reflected in a really handy indicator from Investors Business Daily called the up-down volume. So this is basically a ratio of the volume on up days to the volume on down days. And a up-down volume of greater than 1 basically indicates buying interest, and a up-down volume of 1.7, that's very significant. And that's, once again, one of the things that kind of made me focus on ZM for a potential swing trade. So going back to the chart, once again, I want to focus and kind of highlight all the different volume days where the volume was above average. And this made me confident that institutions were holding the shares and even buying more shares of ZM. So that is pretty much my entry point and why I bought on March 18th. And now I want to talk about my risk management. Because with any trade, you need to have a proper risk management plan in place to protect your equity. And first of all, I had a stop loss of 3% on this trade, which is actually tighter than my usual stop loss of 3.5%. And why did I do that? Well, the market is in a correction right now. It's not a safe time to be buying individual stocks. So I put a plan in place and lowered my risk by decreasing my stop loss. And one more thing that I did was I lowered my initial position size, because even if you have a tighter stop loss, there was a lot of volatility after hours during the past couple of weeks. So stock can easily gap up or gap down 10%. So I wanted to be careful and not lose that much, even if the stock gapped down significantly after hours. So those are the two things that I did to minimize my risk going into this trade. And so far, I've been able to steadily move up my stop loss as the stock runs up. So as I said, my initial stop loss was at 3% behind my purchase price. And then once the stock hit twice my stop loss, so up 6%, I moved that stop loss up to break even. So no matter what, I had a risk-free trade. Then as the stock continued to move up, I continued to move up that backstop, trying to hold kind of 10% behind the price of the stock. So this kind of gives it a little bit of wiggle room, but also protects me if the stock suddenly tanks. And this has worked out very, very well. And on this Friday, I actually took 1/3 of my position off at 21.67%. And why did I sell 1/3 of my position? Well, basically, I want to lock in some profits. And it's a very good practice to take profits as the stock is going up, because that might be the highest level that you see. And on Friday, I could see that it was doing well, but it was at that kind of 20% mark where a lot of stocks kind of pause on the way up. And I want to make sure that I had profits on this trade, so I took off 1/3 size of my position. So now let's talk about kind of my plan going forward. How do I plan to hold these shares, and when am I going to sell? This is often a very hard question for a lot of traders to answer, and it's so important to have a plan in place. So basically, going into this trade, I recognized that ZM had the potential to be a big winner. And the reason I came to this conclusion was for a couple of reasons. First, the fundamentals and technicals show that there's something special going on in the stock. And I also have my own personal experience in using this product and knowledge about other institutions and organizations buying subscriptions. So I go to the University of Maryland right now, and we've basically transitioned to online teaching for the rest of the semester. And our school basically bought subscriptions of Zoom to do distance teaching. And I've heard of a bunch of different companies using this product as well. So I think that the growth in this company in terms of sales and earnings for the next quarter is going to be substantial. And I want to take steps to kind of hold the rest of my position for the long term. So to do this, I'm going to be using the red, white, blue pattern to kind of dictate when I sell my shares. If you're not familiar with what this chart is, it's basically a bunch of short-term exponential moving averages in red, and then longer-term exponential moving averages in blue. And this chart does an excellent job of identifying the current trend in a stock. And if it's in an uptrend, the red will be above the blue with white space in between. And when it's in a downtrend or kind of going sideways, it will be a blue, white, red pattern, or kind of an unclear pattern. And just showing the QQQ, you can see how well this basically type of chart is, how well it does in showing that trend. You can see that in 2018, it protected you from a long drop here. And once again, it got you out pretty early on the 25th for this very steep correction. So that is kind of why I'm going to use the GMMA charts for Zoom to basically identify when I sell the remaining 2/3 of my position. As I said, I think it could be a big winner, and I want to stay in for as much as I can as a part of that move. But even though I thought this stock was going to do well, there were some very important questions that I had to ask myself before I bought this stock. And the biggest basically knock against this trade was the overall market. So for me, I'm a CAN-SLIM type trader, which means I use the CAN-SLIM methodology. And a big part of that kind of strategy is the M, which stands for market trend. And the key thing to do is not buy stocks when the market is in a correction like we're currently in. And I broke that rule with this trade. I broke that rule with ZM. But I think it's okay to break your rules every once in a while if you have plans in place to mitigate that risk. And as I said, I did two things to lower my overall exposure on this trade. I had a tighter stop loss, and also I had a smaller than normal position size. I did have steps in place to kind of protect myself, even though the market was so volatile and during a correction. But I don't advise kind of going out and buying stocks right now. We are still in the early days of a rally attempt. And personally, I'm waiting for that fall through day and kind of a move up in the short-term averages before I really get aggressive and buy out a lot of positions. Right now, I'm mostly in cash. This is my one trade that I'm making right now. And even looking at Zoom right now, I really discourage you from buying it at this time. It's very extended right now, and the risk is definitely a lot higher than when I bought it kind of back in the base. Right now, the stochastic is at 79, and I usually use kind of a level of 75 to determine whether or not a stock is extended from its base. And right now, it is above that level. But if you're looking to take up a position in ZM, I don't think this will be the last buying opportunity. There will be times where it slows down as people take profits, and there will be short-term consolidations that you can basically jump in once they move out of those. So thank you guys so much for watching. Please remember to leave a like down below. It really helps me out and the channel. And if you watch this all the way through, please go ahead and subscribe to my channel if you haven't already. But thanks so much for watching, and I'll see you guys in future videos.